Hey everyone, in this video I'm sharing what I learned when I looked into 118 money and how they structure their fixed-rate loans. This is just an educational breakdown of how the system works, not advice to take out a loan, especially if you're under 18. What got me curious, I first came across 118 money when I was researching how lenders set fixed interest rates. What stood out to me was how they market themselves around simplicity. No surprise fees, predictable monthly payments, and clear repayment schedules. What a fixed-rate loan actually means, here's the core idea I learned. A fixed-rate loan means the interest rate stays the same from the start until the final payment. From an educational point of view, this helps you understand exactly how much you would pay every month. No rate changes, no sudden increases. It's basically about stability. What 118 money emphasizes. Based on my research, 118 money focuses on transparent costs. They highlight that what you agree on day one doesn't change later. Clear repayment schedules. They show how long the loan lasts and the total cost upfront. Credit-based approval. Like most lenders, they check credit history to decide eligibility and rates. Again, this is something only adults can apply for, but it's useful to understand how lenders think. From a learning perspective, here's what I found helpful. Fixed-rate loans are easier to understand for budgeting. Different lenders offer different interest rates, so comparing options is important. The total cost matters more than just the monthly amount. Companies like 118 money position themselves as straightforward, but it's still important for adults to read everything carefully. Why this matters, even if you're not borrowing, understanding how loans work is part of learning financial literacy. Even if you're not old enough to borrow, it helps you recognize how money, interest, and long-term commitments operate in the real world. So that's what I learned from digging into fixed-rate loans and how companies like 118 money structure them. If you're just trying to understand how borrowing works, this is a simple example of how predictable payments and interest rates function.